Thank you, everyone who's here listening. Before we start, full disclaimer. We are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help. Due to the content of the show, this is for mature audience only. Welcome to the Hustle, the Struggle Investment Podcast, where two regular guys not from Wall Street come together and simply talk stocks and investments. We're here to give you the raw and uncut stories of an everyday trader. Tune in and zone out. Let's talk money. Yo, what's up, everyone? This is your host, Herbert. Welcome to the Hustle, the Struggle Investment Podcast. I wanted to do something special today, or rather in this episode. I was supposed to drop episode 4, but you know what? I decided to do a bonus episode. So today's date is May 13th, 2021. And I wanted to do this episode because we've all been experiencing a rough time in the market. So if you're a new investor or you invest already or you just keep up with finances, then you would be aware that the stock market has been pretty rough these past couple of days, weeks, and even few months, starting in mid-February. It's been heavy volatility. It's been moving bearish. Even though we're still in the bull market, we had a recent massive tech sell-off in tech stocks. I mean, an increased price in raw materials and supply. We've had shortages in fuel as of recently. I didn't really follow up much of that detail, but I think a recent article that in some parts of the states, maybe Texas, there's a fuel shortage. There was this ransomware attack on fuel, like some cybersecurity. One of the pipelines got hacked and caused the shortage. And so Biden just called for the pipelines to be open soon. Again, I haven't had the time to cover it. This is just like some headline that I seen recently, but it's been a lot. And then keep in mind that we're still in this pandemic, even though America is starting to slowly open up. I mean, there's definitely different places in the world that's getting hit pretty hard. I know Brazil is hit pretty hard with COVID. They're still recovering. And then as of recently, India has had a devastation. And let's not forget that India has an enormous economy. So I'm pretty sure whatever effects that India going through is going to boomerang and affect the global market. And we still having trade and currency issues with China. I'm still hearing rhetoric on that in the news. and I believe that the Chinese market has been low as well. I mean, that's another country with a juggernaut economy. So again, with these low economies all over the world, it's going to affect the global market. So there's a lot of things that make what this downturn understandable. It's just a matter of time to when it's going to fix itself. I think the biggest talk is price correction, but then the fear behind that is a possible inflation because, again, we're still in the bull. So if the market itself is still moving up, but people are selling, it just doesn't align as far as valuation of these stocks. As of for me, this is the Hustle, the Struggle podcast. So I can give you some of the struggle aspect. The cool thing about this podcast is we give you the reality of what you go through in the stock market. So for me, I might have said this in the episode. I don't think I said this in episode 3. I think this is episode that haven't dropped yet, but I talk about how I'm investing in margin. So I guess I should say what a margin is. So what a margin is basically whatever brokerage account that you're under, whatever institution that you're trading under, they would give you a set of money. Basically, they loan you the money that allow you to further your trading. So let's say you have $10,000 and your $10,000 is all filled with securities. You've invested $10,000. And let's say that there's other securities that you're interested in and you start to see a little bit of bull momentum, bull volatility. These securities are going up and you don't want to miss out, but you don't have any more money to buy these securities to expand your growth. So you just have the $10,000 that you stuck with. Well, the institution would allot you some money, and usually I think it's double what you have. So if you invested in $10,000, they give you $10,000. I don't know if there's a set number or if you ask for a certain amount of money in margin. I'm not sure. Honestly, I didn't pay attention when I said I wanted margin. They just gave me the money and I started to invest. But Yeah, so the positive thing of margin, as I said before, like if you stuck with $10,000, you don't have any new fresh money to further your investments, then you can use you can use margin, and it helps you kind of expand your trade, expand your gains. So with that $10,000, you can buy the security. It goes up, and let's say it goes up maybe $5,000. So you'd have made an extra $5,000 because you had that money from margin that allowed you to buy that security. Now, here's the catch, however. With margin, because it's a loan, you do pay interest while you're in margin. If you hold the security, you pay interest. And there's a good chance that if you lose money, obviously you lose money into the margin and you have to pay that money back to the institution because, again, it's a loan. So, but I forgot to mention this. The positive side is, let's go back to that example of you making the $5,000. So let's say you have $10,000 in security, you buy the security, you make $5,000 on margin. The cool thing is you keep your gains. So if you had $10,000, you got margin, you bought a security and it goes up and you make $5,000, you make that trade, your return is $5,000, you keep that gain, and now you have $15,000, in your account. Because that money that you use to invest, that goes back to the institution. So the institution get that money back and you get to keep the gain. So you don't pay any fees. Again, it's just interest that you pay, and you only pay that interest while you have your security in margin. But the risk involved, or the negative effect, is, let's say you have the $10,000 and then you buy a bunch of securities and it goes up. Let's say it goes up $10,000. So now you have $20,000. But then for whatever reason, the market crashes and it plummets and it goes down. If you lose money and it goes all the way down to $10,000, then boom, you have to pay that $20,000 back in margin. Again, it's a loan, so it's a very, very high risk. It's not pretty, and if you definitely go in the red with margin, then you get caught in what they call a house call. And what a house call is saying, hey, you owe this money. Your account is going very low. If you don't make a trade, or if you don't put more money into your account, this is going to put you even more in debt. And it's actually good that you get a house call, because it prevents you from losing everything. It prevents you from actually defaulting your account and having a bad relationship with the institution that you're trading under. So usually with the house call, it's not necessarily a bad thing. It's just you may have to make a couple of sacrifices on your account. You either have to put more money in, depending on how much you owe on a house call, or you may have to force a trade. So you may have some security that you wanted to hold for the long term, but you may have to sell it off just so you can leverage out whatever you owe with that margin. So there is definitely some very, very high risk and bad effects with margin. But then, let's say in a healthy, volatile bull market, like what we saw last year in 2020, the margin, I think, is very, very great. It's a great resource, just to kind of give you that extra push in what you want to buy. But of course, if you decide to trade in margin, I would suggest that you have a lot of money and you definitely know what you're doing and have some experience with trading. I would not go into margin as a rookie just starting off. And I definitely wouldn't go into margin with just like $1,000 or $5,000. You definitely want to have a good amount of money because you just never know. So back to my situation. Basically, I thought about leaving the market, and I should have, and I regret it, but I did not, because I was definitely confident in my portfolio. But I had a great year. I made a lot of money last year in 2020. So coming in 2021, what I ended up doing is I shaved and I sold a lot of my big gains. But what I did is I just reinvested and bought. And maybe I should have just waited for a little bit, reevaluated, waited a couple months just to see what the stock market will do. But because things seemed so well and so hopeful, then we was in that transition of presidency, of Donald Trump leaving office and having Joe Biden. I figured that, things would get calm. And I made a bad prediction. So what I ended up doing is I bought stocks in a lot of low value companies. And what I mean by low value is that I didn't invest in any big companies where the stock may be, $60, $70 a share. I got some of the low value where it's $12 a share. I bought a couple of ETFs, few mutual funds, a few startups. My main industry was healthcare, tech, and then electric vehicles, and then some of the technology behind the electric vehicles like batteries and so forth. And unfortunately, all my stocks just crashed. It literally crashed this week. I just hit my first house call because I mentioned before I was trading on margin. And even then, I should have left margin. But the reason I didn't leave margin because I did not want to force any of my trades. I was that confident. But I guess I was naive and I made a mistake. So now I'm in a situation where I have to figure out how can I exchange my margin back into cash. And then I may have to sell off and shave and trim my portfolio, unfortunately. But it doesn't mean that I can't get back into the market and I can't, buy other stocks. The only problem is I just have to wait till I get new money. So, this is just some of the realities that you go through. But I think the most important part is that you can't freak out. You can't give up. And I've always stressed this, but this is money that you're willing to lose. So the money that I have invested, I have to expect to lose it. It's just a matter of how long we're going to be in this mess. And I hope that it's not that long. But, if you're a new investor and you're thinking about getting into it and you're seeing that the market is as bad as it is recently, of course, it may make you hesitant. It may make you timid. You look at the markets, you see a lot of red and you're like, oh, I don't want to get into that. People are losing money. Well, if you're a new investor or if you have fresh money that hasn't been touched, this is actually the perfect time to get into the market because it's low. Of course, you have to do your research and pay attention to what you buy. And some of my suggestions, definitely when you buy into a low market, is pay attention to the industries. What industry is really moving, what's in high demand. Is it oil? Is it gold? Is it other technological components? For example, like airlines been low because it's been hit by COVID. But as the nation opened up, people are urging to travel. So keep in mind that any airline stocks that crash should probably be a good time to buy airline stocks because eventually, once America opened back up, more people get vaccinated, we can get on planes, they can fill more seats onto the planes, then obviously we'll probably see this growth back into the airline sector. This is just an example. I'm not speculating that. But pay attention to the industry. Keep in mind of some of the innovation for the future. I mean, what you can see significantly being into the market. Another example, electric vehicles. Because there was so much speculation in 2020 electric vehicles, and you saw Tesla hit the S&P and make all this money. I can definitely see more regulatory systems of electric vehicles. Of course, we still rely on gas and we still have people that's behind cars, but you're starting to see further development of autonomous cars and electric vehicles. So it may take another 3 to 4, almost 5 years, maybe even longer to be a significant component, but definitely anything on the low end be a great time to buy. And I would even say that Tesla would be a great time to buy because it went from 900 at its highest this year all the way as low as $570, I think. But these are just some things to pay attention to. And another significant point is the EPS. So another reason why we've had this massive sell-off in tech stocks is because if you notice, a lot of these companies did not meet their EPS. And there was a lot of low expectations. I know all of my companies were in the negative on their EPS. Yeah, I forgot to mention the EPS is earnings per share. So the earnings per share was low for the first quarter. We just had our first quarter of the year where the company had to announce their earning per share. If they met expectations, they beat expectations, or they went below expectations. So, of course, a lot of my stocks were below expectations. A lot of them was in a negative, and that's not always a good sight. Of course, even in a good market, any company that has a negative or a bad EPS, that always tends to start a sell-off right after that. But there are companies that did beat their EPS. Unfortunately, I didn't have any. But that's one thing that you want to pay attention to, like what companies actually did good in this first quarter. So if they did well in this first quarter, then that should give them the leverage to possibly remain neutral. Maybe slight volatility, won't be affected by this temporary bear market as of right now. And you may see some substantial growth, later on as the economy starts to recover. So these are just some tidbits to just keep in mind if you want to come in and invest and what to pay attention to. Of course, do significant research. And one thing I can highly suggest, because there's been a lot of hype as of lately, a lot of talks with Dogecoin, cryptocurrency, Ethereum. Do not follow hype, especially in a market like this, because it's easy to get distracted. Not to say what happened with Dogecoin and Ethereum hitting all-time highs, or all of cryptocurrency hitting all-time highs is hype. But what I mean by hype is the whole come in too late component. Like we use the term FOMO, but if Dogecoin already shot up, don't fall into the hype. Like, yeah, you better get into Dogecoin now because it's gonna shoot up to the moon. I love that term because you will see that a lot in the financial space on YouTube. They always say it like it's gonna go to the moon. But yeah, I mean, if it's already hit its high, like, you make that decision if you want to go into it or not. But my thing is, whatever you buy it off your own will, your own confidence. Don't get caught up in FOMO. Don't get caught up where you buying it because everyone else is. If you miss your mark, there's always going to be another chance. There's always going to be something else. And it may happen, it may happen later in life. It may come sooner, but just don't fall into the hype because it's really going to distract you for what you really want to do and what you want to focus on. I want people to buy their shares or even crypto with confidence, but you want to invest with confidence. You don't want to just fall into some marketing trap. So again, I would say pay attention, not necessarily to real life events, because I can tell you reality doesn't really correlate with the stock market. It's all about numbers and you have to be very intuitive. Make sure that you pay attention to like the supply and demand of the markets. Even with crypto, even though crypto is not the stock market, it's not a security, even still, there's a lot of hype around which crypto coin to buy. And, like anything, it's all at risk and no one knows it can determine. That's why you have to be analytical and pay attention to the numbers and then pay attention to the whole supply and demand aspect. There's reasons why one coin goes higher than another. There's a reason why one stock has a maneuver and one stock is going down. And what I mean by the supply and demand sector, there's the consumer base and then there's the industry base. The consumer, you can think product. The industry, you have to think of material, manufacturing, and development. That's the innovation part. So you have to think about what's going to be the turning point, what's going to be newly introduced as we get out of this post-COVID. Definitely the world is going to change. It's going to change substantially the way that we do things. That's probably why we're seeing more positivity in cryptocurrency as an example. That's probably why we're seeing more growth and more need for technology and why there's a massive sell off tech stocks and this price correction that we have going on, because we can say that the entire industry is just at a turning point, making this readjustment to how we're going to do things. Another example, you have people working from home now more than ever, and this may be a permanent thing for certain companies. So again, we have to figure out this leverage to what we're going through and how life is changing, but how the industry is changing. But that's not to say that, the market can't crash. We can't go through a really bad inflation. We really don't know at this point. Again, I just wanted to give a little bit of optimism in a positive perspective. For me, I believe in the market. I've definitely gained a lot. This is my first time losing something massively. So for me, I'm just taking this as a learning curve. I'm not going to give up. It happens to the best of us. It's people that's losing millions and millions of dollars right now. In whatever I lose, I'm not the first, won't be the last. So with all that said, if you are in the market and you have lost, don't lose your cool. Don't get emotional. This is your time to act and act fast. Be strategic and weigh out all your options. I believe in diversification. I do not believe in putting your eggs in one basket. So I would say diversify. Whatever money that you lost, this could be an opportunity to go somewhere else. And whatever new money that you have that you're able to invest in something else where you could potentially see growth. But again, that's really up to you and what you seek. But let's just hope that we can bounce back from this and not go into inflation. I think some of the good news that I do know is that there's been a rise on unemployment. People are getting their jobs back. Again, the economy is slowly opening back up as America is opening back up. I think the latest news is the Federal Reserve decided not to raise rates, even though the bond yields are substantially high. I don't know about the capital gains. I think there was fear that Congress may pass a bill to make capital gains at 80%. I don't know if it was for crypto or stocks in general, but I think you had to make $1 million or more. So I'm not a millionaire, so I don't think I would be affected by that. But other than that, there are positive news to pay attention to. So again, if you're a new investor, if you have money on the outside, you have fresh new money, I think this would be a good time to get into the market. Of course, start slow, and I would start little and just see what happens. I'll probably even pay attention to how can I put it? You could say relatively, well, I wouldn't say blue chip, but just, I guess, known enough or not well known, but known just enough startups or low value stocks, low value securities, and just see how they react next coming weeks and months. And then I think you can like tear up and focus on some blue chips and as they recover. So I think one of my hottest buys that I'm going to get into is Fresh Pet and PayPal. I would consider these blue chip. I don't have these securities, but they've have substantial loss. They're trading over $100 a share. So I think I'm going to get into that. That's just my own insight. Yeah. That's pretty much it, man. Again, this is not a long hour episode because this is only a bonus episode of me just giving my perspective, me wanting to vent to what's been going on these past couple of weeks and just to share to you guys the reality of what it is to stock trade. I just share with you my loss. Now, of course, I'm not going to tell you how much I lost, but I've lost substantially and my whole entire portfolio has crashed and I was in margin. So you can use your imagination and know just if you know anything about margin and how this shit works and having a house call. So you can just imagine the situation that I'm in financially. But I'm still optimistic. I'm still hopeful and I'll bounce back from this. I mean, the good news is I have a job. So it's not like I'll be completely broke. But, you know, it is what it is. You learn from it. But other than that, I will be dropping episode 4 soon. So thank you guys for always tuning in and supporting this podcast, the Hustle, the Struggle Investment Podcast. So I hope this doesn't scare you. Definitely pay attention to the market. And again, if you're a new investor or you're just curious about it, you want to get into investment, I think this is a good time to get in while the market is low as it is. But of course, pay attention, do your research and all that good stuff. And I always forget, I got to do the plug. Make sure that you check out the YouTube. You could just search the Hustle, the Struggle Investment Podcast. I should pop up my channel. Also, please follow my Twitter, Instagram, Facebook at the Hustle, the Struggle. Also, if you want to reach out to me, you can always email the Hustle, the Struggle at gmail.com. Would love to hear from you. If you just want to give insight or tell me a certain topic to talk about on an episode, whatever, or you just want to say hello, please email me. And since I'm streaming on Anchor, I'm now on 7 platforms, including Spotify, Google Podcasts, and Apple Podcasts. So if you have any of those other platforms, you can always search the Hustle, the Struggle Investment Podcast. I should pull up. And if you are streaming on Anchor, you can definitely support this podcast by leaving a monthly donation or monthly contribution. Yeah, I believe there's 3 types of payments where you can pay as little as 99 cents a month. Then the next one is $4.99 a month. And then the highest is $9.99 a month. And again, this is just a contribution donation to the podcast. You're not paying for a subscription to listen. This platform is always going to be available for people to listen with ads, of course. And you can stream and listen to it on YouTube. This is just to keep me going. If you really want to support, I'll probably just take this and reinvest into the podcast where I can get more hardware and, you know, just build this platform up, get some employees, and you just never know where this thing can go. Or I can start doing cash giveaways. So whatever you invest, I can just take that and give a cash giveaway to someone that potentially need it. Other than that, man, I mean, again, that's just if you want to show love and support. And right next to the support, if you go to the page to the far right, there's a message button where you can actually leave a voice message. So I would love to hear from you. You can call in. I think if you leave a voice message, I can actually feature you onto the next episode. But I definitely want to get people involved. I want to build my base, my audience. Please, just any way that you can support. And if you don't want to give money, you don't have to. I mean, I really just want people to support by engagement. That's what I really want. I want people to comment, send emails, leave messages on the episode. But I would love to hear from you guys. Again, this is grassroots investing. I want to build a community of just, you know, everyday people that want to get into investments, you know. But other than that, thank you guys for the continued support, and you all have a wonderful day. And hopefully we will bounce back stronger than ever, and we all will be making money in a perfect world, right? All right, guys, this is your host, Herb. I'm out. Thank you, everyone who's here listening. Full disclaimer, we are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help.